The greatest victory is the battle you never fought. In trading, most traders learn this after they've already lost the war. That was written by Sun Tzu 2,500 years ago, and every trader who makes it long-term learns it the hard way. Here's what nobody tells you about trading. Your account isn't a tool for making money. It's ammunition. Every trade you take is a bullet fired. And once you pull that trigger, you can't get that bullet back. You can't reuse it. Every shot needs to count because you only have a limited amount before you're completely out of the game. But most traders, they're firing blindly at everything that moves. Most traders treat their capital like it's infinite, like there's always more where that came from. Like losing $500 today doesn't matter because they'll just make it back tomorrow. Except tomorrow comes and they're down another $400, then another $600 the day after. And suddenly they're looking at a blown account wondering what happened. What happened is simple. They forgot what capital actually is. Your trading capital isn't just money. It's your access to opportunity. It's your seat at the table. It's the only thing standing between you and being forced to watch from the sidelines while everyone else trades. Picture this. You got $10,000 in your account. That's not $10,000 of buying power for whatever looks interesting. That's 100 trades at 1% risk. 100 bullets. But here's what happens when you don't treat it that way. You take a mediocre setup because you're bored. Risk 1%, lose it. Take another questionable setup because you want to stay active. Another 1% gone. You keep bleeding small amounts on trades that don't meet your criteria. And now you're not at 100 trades anymore. You're at 85, then 70, then 50. And the brutal part? Those 50 trades you have left, they're the ones you'll actually need. Those are your A-plus setups, your legitimate edges, your real opportunities. But you already spent half your ammunition on garbage. This is why capital protection isn't just important. It's everything. Because you could be the best trader in the world with the perfect strategy, but if you blow your account taking stupid trades, none of it matters. You're out of the game. Here's what most traders don't calculate. The real cost of a bad trade isn't just the money you lose on that trade. It's the opportunity cost of what you could have used that capital for. Say you lose $500 on a setup that was barely worth taking. That $500 could have been your risk allocation on the perfect trade that shows up 3 days later. The one you actually studied. The one that fits your edge perfectly. The one with good risk to reward. But you can't take it now, where you have to size down. Where you take it, but with half conviction because you're already down and feeling gun-shy. That's the invisible cost. That's what careless trading actually steals from you. Not just the money, the opportunities. And opportunities in trading are everything. You can't trade your way to success without them. No matter how good you are, you need capital to execute when they show up. Every dollar you waste on a mediocre setup is a dollar you don't have for the perfect one. But here's where this gets interesting. Most traders know this intellectually. Ask any trader if capital protection matters, and they'll say yes. Obviously, everyone knows you need to protect your capital, but then they act like they have an infinite balance. They trade like every setup is worth taking. They click buy on setups they know are questionable. Why? Because they don't actually see capital as sacred. They see it as replenishable. They see it as just numbers on a screen. They see it as something they can always get more of. And technically, yeah, you can deposit more money. You can refund your account after you blow it. But here's what you can't get back: the psychological damage, the confidence hit, the proof to yourself that you can't be trusted with money. That's the real cost of not protecting capital. It's not the dollars. It's what those dollars represent about your ability to execute a plan. Now let's talk about something that sounds weird, but completely changes how you trade once you understand it. Not trading is actually a B-tier trade. What? Stay with me. You spend all your time looking for A-plus setups, right? Those perfect alignments where everything clicks. Clear structure, confirmation, your edge showing up exactly how you like it. Those are rare. Maybe you see 1 or 2 a week if you're lucky. But you see B-tier setups constantly. Decent structure. Okay volume. Not perfect, but tradable. The kind of setup that could work, but isn't quite your bread and butter. Most traders take those. Because they're not bad setups. They're just not great. Here's the thing though. When you choose to sit in cash instead of taking that B-tier setup, you just executed a trade that's about as good as that B-tier setup would have been. Think about the math. A B-tier setup might win 60% of the time, lose 40% of the time. Average outcome over 100 trades? You're maybe slightly profitable, but you're grinding through volatility and commissions and emotional capital. Not trading? Zero risk, zero stress, zero emotional drain. Capital completely preserved. And you're still sitting there ready for the A-plus setup when it shows up? That's a B-tier result without any of the risk. That's literally better than taking the B-tier trade. But it gets better. Every time you don't trade, you're staying fresh. Your mind isn't cluttered with managing positions. You're not watching every tick. You're not making exit decisions. You're just observing, waiting, preserving. And when the A-plus setup shows up, you're ready. You're not already in 3 mediocre positions trying to figure out which one to exit to free up buying power. You're not emotionally drained from managing trades that barely matter. You're locked in, clear-headed, ready to deploy on something that actually matters. So what does it actually mean to treat your capital as sacred? It means every dollar in your account has to justify its deployment. Before you risk any amount, you need to ask yourself, is this setup worthy of my ammunition? Not can this work? Everything can work. That's not the bar. Instead, it's, is this worth spending limited capital on? Because that's what you're doing. You're spending. Every trade is an expenditure from a finite resource. And just like you wouldn't blow your paycheck on junk you don't need, you shouldn't blow your trading capital on setups you don't love. Here's a practical framework. Before every trade, rate the setup honestly on a scale of 1 to 10. Not based on hope, not based on potential, based on how well it matches your tested criteria. Anything under an 8, don't trade it. Sit in cash. Execute the no-trade trade. Sounds extreme, right? You'll barely trade. You'll miss so many moves. You'll be sitting in cash constantly. Yeah, exactly. That's the point. Because the moves you miss don't cost you anything. The moves you take and lose on, those cost you everything. You're not trying to catch every move. You're trying to protect capital long enough to catch the moves that matter. The ones where everything aligns. The ones where your edge is undeniable. Those are the only trades worth taking. Everything else is just capital destruction disguised as opportunity. And here's what happens when you actually implement this. Your win rate goes up. Your confidence increases. Your account grows. Not because you're trading more or trying harder. Because you're protecting capital ferociously and only deploying it on certainty. The no trade becomes your most frequent trade. And it's a winning trade every single time because you're not bleeding capital on mediocrity. The mental shift you need to make is from offense to defense. Most traders are in offense mode constantly. They're hunting for entries, looking for the next trade, scanning for opportunities. They think trading is about attacking the market. It's not. Trading is about defense first. It's about not losing. Once you master not losing, winning becomes easy. But you can't skip straight to winning. You have to learn defense first. And defense in trading means capital preservation above all else. Here's a way to think about it that clicks for a lot of people. Your trading account is a castle. Every trade you take opens a gate. When that gate is open, you're vulnerable. The market can raid your treasury. The more gates you open, the more vulnerable you are. So you want as few gates open as possible. You want to be selective about which gates you open and when. You want maximum defense with minimal exposure. That means not trading is your default state. Closed gates, protected capital, safety. Trading is the exception. It's opening a gate because the potential reward is worth the risk. But you only do it when conditions are perfect. When you've got reinforcements ready. When you've scouted the enemy and know their movements. You don't just open gates randomly hoping it works out. But that's what most traders do. They open gates constantly. They're exposed all the time. They think being in trades is the job. Being in the right trades instead is the real job. Everything else is just taking unnecessary risk. And every time you choose not to open that gate, every time you pass on a questionable setup, that's a defensive win. That's capital preserved. That's a B-tier result without any of the B-tier risk. Stack enough of those, and you'll outlast everyone who's bleeding capital on mediocre setups. Let's talk about how to actually make this real when you're staring at a chart and something looks tradable. You need a filter. something that stops you from clicking buy on setups that don't deserve your capital. Here's what works. Ask yourself, if I only had 3 trades left for the week, would this be one of them? 3 trades. That's it. That's all you get. Would you burn one on this setup? If the answer is anything other than an immediate yes, don't trade it. That's your signal that this isn't A tier. It's not worth your limited ammunition. Because here's the reality. You should be trading like you only have 3 great opportunities per week. Even if you could take 30 trades, you shouldn't. Because 27 of those 30 are probably mediocre at best. The 3 that matter? Those are the ones worth deploying capital on. Everything else? Execute the no-trade trade. But here's where most traders mess this up. They think passing on a setup means they're being lazy or scared. They think they're supposed to be active to be profitable. Wrong. Activity and profitability are inversely correlated in trading. The more you trade, the worse you typically do. Because every trade is a risk event. Every trade is capital exposure. Every trade is a chance to be wrong. The less you trade, the more selective you are, the higher quality your average trade becomes. This isn't about being scared. It's about being smart. It's about recognizing that capital preservation is more important than participation. And when you pass on 10 setups to take the 11th one that's actually perfect, you just outperformed everyone who took all 11. Because they're dealing with the 8 losses from those mediocre setups. You're sitting there with 1 clean win and 0 emotional damage from the garbage. That's the edge. That's what separates long-term winners from everyone else. Here's where this really gets powerful. When you protect capital like it's sacred, when you treat no trades as legitimate B-tier wins, something compounds over time that most traders never experience. Your account becomes anti-fragile. What does that mean? It means instead of being vulnerable to bad stretches, you're actually positioned to benefit from them. Think about what happens during choppy markets when nothing is setting up clean. Most traders are bleeding capital trying to force trades. They're taking marginal setups because you have to stay active. They're losing 1% here, 2% there, death by 1,000 cuts. You're sitting in cash, executing no trade after no trade, preserving every dollar, staying fresh, staying ready. And then the market shifts. Clean trends start forming. A-plus setups start printing. Everyone else is depleted. They're down 15% from the chop. They're gun-shy. They're trying to recover. You're at full strength, full capital, full confidence, ready to deploy aggressively on the good setups. That's anti-fragile. That's using the bad times to position yourself for the good times. And you can only do that if you're not bleeding capital when conditions are poor. This is why professional traders can go weeks without trading and still outperform people who trade daily. They're not lazy. They're not scared. They're protecting capital until deployment makes sense. And when deployment makes sense, they have the full weight of their account available. No recovery needed. No psychological damage to overcome. Just clean execution on quality setups. That's the compound effect of treating capital as sacred. It's not just about not losing money. It's about staying at full capacity so when opportunity actually arrives, you can exploit it completely. Let's address the obvious pushback here. But if I don't trade, how do I make money? You make money by taking the trades that actually matter and skipping everything else. You make more money taking 3 A-plus setups per month than taking 20 mixed quality setups per month. But what if I miss the move? You will miss moves. Constantly. Every single day, something will move that you didn't trade. That's not failure. That's selectivity. The moves you miss are free. The moves you take and lose on cost you. But I need to stay sharp. I need to trade to maintain skills. You maintain skills by studying, by reviewing, by analyzing, not by throwing capital at mediocre setups. Taking bad trades doesn't make you sharper. It makes you poorer. The traders who survive long enough to actually make it aren't the ones taking every trade. They're the ones who say no 90 times to say yes 10 times. They're the ones who treat their capital like it's the most valuable resource in their trading career. Because it is. Without capital, you have no career. You have no opportunities. You have no ability to deploy on anything. You're done. With capital, you have infinite chances. You can wait for perfect setups. You can be selective. You could trade like a professional instead of a desperate gambler. The choice is simple. Treat capital as sacred and execute no trades like they're legitimate winning trades. Or treat capital as expendable and watch it evaporate on mediocrity. One path leads to longevity. The other leads to blown accounts and trading isn't for me conversations. So here's what changes when you actually embrace this. You stop feeling guilty about not trading. You stop thinking you need to be in positions to be a real trader. You stop comparing your activity level to other people. You start seeing your account balance as a score of how well you protect capital, not how often you deploy it. You start treating no trades as wins. You track them. You celebrate them, because each one is capital preserved for when it actually matters. You start feeling pride in passing on setups that would have lost. You start seeing selectivity as strength, not weakness. And your account starts growing. Not because you're trading more or trying harder, because you're protecting capital and only deploying it on certainty. That's the whole game. That's what separates the 5% who make it from a 95% who don't. The 95% treat capital as expendable. The 5% treat it as sacred. Which one are you going to be? If this resonated with you, drop a comment below. Thanks for listening.